Hi, Steph. Good to see you. Let's talk about the semiconductors. They seem to be taking a little bit of a pause. Is it a pause that refreshes or a pause that concerns you?
Yeah, I mean, I think it's a pause that refreshes. It could take a little bit of time, though, Tyler, because the SMH is actually up for 52%. And there are many, many semiconductors beyond NVIDIA that are up 40, 50, 60%. So that's not that normal, even though AI is very powerful and we are in the early innings. And it is a $2 trillion total addressable market by the end of this decade. And it's really impacting so many different industries. So I think it just takes a pause. What I find really interesting is that the last week and even today you are seeing a broadening out into other sectors, and I think that's healthy. That's healthier than having NVIDIA account for 5% of the S&P 500 and 35% of the gains year to date. So I'm looking at sectors like financials, energy, industrials, where I think earnings are still going to be good, and that's why we pay attention to what the overall economy is doing. And if I think we're running at about 2.5%, I think you're going to see very good earnings, and again, supportive of some of these lagging sectors for the time being.
So since we must always discuss NVIDIA, why don't we just get it out of the way? How do you explain, or is there an explanation for its pullback 15% since its high on Thursday? Or is the explanation what I think you were just hinting at, and that is some prudent rotation away from a sort of an, not overvalued, but an overplayed sector, maybe?
Yeah, I mean, this stock, NVIDIA, is very overowned. 90% of the sell side have buys on it. It's had a heck of a run, and it's kind of hard to explain just how fast the velocity of the move. But like I said, there are other semiconductors that have also done really well. And I just think, look, these are great trends. It's a great company. But if you're going to see better earnings elsewhere, well, why not pick up the banks that are at 1x book value? Some of the industrials at 14, 15 times, and you have this huge tailwind with regards to onshoring. In energy, I mean, the sector's down and out, and yet the executives are scrambling like mad to do M&A because they see value. We've seen almost $500 billion in energy M&A in the past year. So I kind of like these other sectors at this point in time. I don't own NVIDIA, but I do own Broadcom. I've actually been trimming Broadcom.
I was just going to ask you what you were doing with Broadcom, Steph. I'd be curious to hear kind of the broader take on that.
Yeah, no, look, it's had a great run. When I bought this stock 2 years ago, it was trading at 14 times forward estimates, and it yielded 4%. Wow. Fast forward 2 years, the stock is now at 34 times forward estimates, yielding a lot less, of course, because the stock has moved so much. I love it. I do. I really think what they're doing is tremendous. I think VMware is a game changer because it gets them more software exposure, which is higher margin business. I think their AI component is going to grow 35% plus. I think non-AI has actually troughed and can grow maybe 3 to 5% or so. So I like it for the long term, but I got to take profits. I mean, I would kind of hit myself over the head if I didn't take some gains. It's still a pretty big position.